Welcome to the Theo video. I'm Jeff White, and it is Thursday, February 11th, 2016. And that is to say, you still have a couple days left to do a little Valentine's Day shopping. So despite this ugly market that we find ourselves in, there is that little bit of good news. So speaking of the market here, the big test happened today. And, you know, in one small way, the market passed. That test is taking place here in the SPX, and specifically this January low that had been painted down here at 1812 back on January the 20th, which we've been watching very closely for the past few weeks. Ever since we lifted from that level, it's been just kind of one of those things we keep front and center, that that test may indeed happen to come one of these days, and that day was today. So, you know, we saw this initial bounce here off of this 1812 level in the SPX up to 1947, which was very close to this previous minor bounce high back in mid-January to 1950. So we kind of validated that area as some intermediate term resistance, you could call it, and since then we've backed off. Now, we did briefly respect this 1872 level, but we have since undercut that, and we've now moved on down here to challenge and actually today, in fact, breach this 1812 by a very modest amount. Today's low was 1810, so about a 2-point undercut there in the SPX. So by that measure, it is a break, and over the course of just the past 9 sessions, basically, you know, we've seen a 137-point slide from the high here of just last Monday, February 1st, into today's low. So it's been a deep slide, and needless to say, it's not been pretty. And today's bar, having undercut this 1812 to 1810, you know, technically that is a breach. So it is a very minor one, but even this 1812, you have to go back in time a little bit, but if you do, you can go back here into 2013, and twice we had validated this same little area here. Back in April, it was 1814 was the low right there on April 11th, and that's 2013. And then, of course, the low was 1820 on October 15th of 2014. So a couple of times we had validated that same area, and we briefly undercut it here in January as we printed that 1812, but we did see a little bit of a recovery. Now we're back into that same little zone here as of today's move to the downside. So, you know, to see a level get briefly undercut slightly can still mean just a successful test. Now, interestingly, the bounce that we saw take place late this afternoon coincided with you know, a rumor here that maybe OPEC is willing to finally cut production. So in this lower chart, you see the chart of crude oil here, and it had just printed a fresh low at 26.05, and obviously spiked very quickly back above 27, which in turn helped the financials, and that of course helped out the SPX temporarily anyway. So going back here to this SPX daily chart, you know, tonight the big question is whether or not this current decline is over. That, you know, is you know, being considered by traders worldwide right now, as we're kind of looking at this double bottom type of scenario, which is not too different than what we saw last August and September. Now, September was a little different in that we did paint a bit of a short-term higher low, but that was able to lead to a significant market rally in the weeks which followed. And so there's a bit of a comparison that could be made there, but that's kind of where the comparisons end. In fact, the difference between these two lows back then was about 5 weeks, and in this case it's only 3. We also now have a little bit of a short-term lower low, and so by that measure we've already, you know, kind of you know, ended the similarities there. You also can then go in here and change from a bar or a candle and look at a line chart. And you'll recall that a line chart is going to plot just the close each day and then just connect the dots. And so when you look at it by that measure, today we've already since broken down. So we're well through that closing low back here in January. So there's not a whole lot to hang your hat on there if you are in fact a bull at this point. And other than that, I mean, there's maybe 2 things I think that you could place a little bit of hope on. And when I say a little bit, that's all I mean is just a little bit. The first is that maybe price is a little bit short-term extended here enough in the near term to produce a little bit of a bounce. Maybe it's just a little bit sold out. The VIX today, we did see it edge past 30 at the high here for the VIX. It got to 30.9, but it did end up settling today right here just above the 28 level. So not exactly an extreme reading by any stretch, but hey, there's that chance that maybe stocks can get this bounce here after testing this 1812 area and being able to close above that 1812 level, and now of course being short-term extended here after this little 9-day slide. Stranger things have happened than a bounce from there. So that's one scenario that could play out. Another one that may be a little bit more likely requires that we take a little bit closer look here at bonds, which have of course just been ripping higher in recent days. You'll recall going back here to the first of the year, they've really been hugging this uptrend line. So it's been kind of a steady pace here, but here in the last few days, the move has gone from something along the lines of this to much sharper. They've gone vertical here. They've gone parabolic. And then you look here a little bit closer at today's bar, and all of a sudden you see, yes, they printed a high up here almost to 171. 170.26 was the high, but then they closed back down here at 168.11. And so by that measure, they've kind of seen a little bit of air going out of them, and that's one thing that bulls could look at and find maybe a little bit of encouragement here in the short term that may allow for a little bit of a stock market bounce. Being that the bond market absolutely dwarfs the stock market, if money comes out of bonds, some of that is going to go into stocks, and that may produce a little bit of a short-term bounce as well. The thing to recall here, though, is that you don't want to be too quick to try and call some kind of a top in bonds. The pullbacks, the dips, whatever, the little profit-taking bouts that we've seen here recently in the ZB have been extremely shallow, and they've been very short-lived. And although that places no rules on the next pullback if it is starting to get underway. This, however, might be what the bulls need in order to stop the bleeding in stocks. And so it's something that you definitely want to keep front and center on your screen. So, one other thing to consider with tonight being a Thursday and therefore tomorrow being a Friday, going back to the first of the year, we've seen all 5 Fridays in the SPX being pretty significant moves. They've all been in excess of 1%. We've had a few in excess of 2% on Fridays. So as we head into tomorrow's session, expectations may be running a little bit high for that trend to continue. Keep in mind the market is also going to be closed come Monday for President's Day. So we've got this 3-day weekend here that could absolutely impact the way that things move tomorrow and how the day unfolds. So be ready for anything and everything. We've absolutely seen it. In recent days, we've seen it happen, continuously lately. Be ready for any and everything tomorrow because it certainly could happen once again. Thanks a lot for stopping by TheoTrade, and we will see you in the chat room on Friday for 3+ hours of live broadcasting and trading. Have a great night.